Good evening, good afternoon, or good morning, depending on where you are in the world. This is the market update as of November 13th. And let's start off with the S&P futures. So last week we had that CPI data that came out with 7.7 inflation on this day right here. And then we saw a ginormous move that took out the previous high on October 31st. And we have the S&P running probably up to the 200-day moving average. So this is a pretty big move from that economic data from last week, and with about a month and a half left into 2023, it looks like the market's going to try to attempt a rally back above the 200-day moving average. Now, we're not really quite sure yet if the market is out of the bull market, out of the bear market. Technical definition of a bull market is if the market closes above the 200-day moving averages and starts trending. Okay, so here it closed above the 200 and started trending, and then it was technically in a bull market. But then as soon as it closed under the 6-day moving average here, then the trend was broken. So yeah, like in trading, in order to make profits in this market, traders have to kind of get into the position before you get that technical definition, right? You don't make that money. Well, you can make money after the confirmation, right? And then you just kind of hold into December and January. But most of the money is usually made in advance, right? So you kind of like that's just the way these types of instruments work. You can't really know in advance. You have to take that risk early in order to make that alpha gain. So from this bearish candle on the 9th, the CPI data came out, and then it ripped the market for the Nasdaq 7%. And now it looks like we might have this marching candle formation that keeps on moving the S&P up to at least that 4,082 level. That's the 200-day moving average. And then when we look at the Nasdaq, there's actually a gap that's still open that I've been talking about during this whole choppy period. So let's take a look at that. So there's that gap there at 13,201.5. So that's a pretty significant gap. You can see the futures are open down 0.54%, and the S&P is trading lower. And it's probably we should have expected that, because you can see that the daily candle for the Nasdaq and the S&P is quite extended away from the 6-day moving average. Okay, so it'll take about, like, we'll see what happens overnight. There's still a chance that it ends up being green by the end of before the opening bell at 12,010, right? And then it gets more and more extended. So we'll see what happens throughout the night, but it does look like it's opening up lower, and that might end up closing green, opening green into Monday. So what can we see from the TTM squeeze is that the Nasdaq has squeezed on cycle 1 and 2, and going into 3 and 4, probably see a bit of a pullback. Okay, that probably, right? But it's too early to tell. Futures on Sunday tend to kind of gravitate higher, okay, as time moves into the opening bell on Monday. So we'll see if that happens. The current position I have, so after a huge move like that, you don't really want to jump into too many positions. Like, the risk that one would have had to take would have been opening up a whole bunch of long positions on Wednesday, just before the market bell closed. And then actually the market internals spiked up to 2.74, I think, indicating a high probability of a rally going into CPI. So I posted that in the Discord channel. Now, aside from that, we have positions going into Monday and Tuesday. One is in Tesla, and then there you can see here we have a daily wolf wave setup. So you can kind of see that the two candlesticks, there's this massive hammer from that pretty much kicked from Wednesday's low, and that's an interesting bullish engulfing, I guess. But it is trading above the 6, right? And the gap, I guess, is still open by a penny. And there's a chance that Tesla could move up to 211.68, which is the 21-day moving average. That's a 9% move. Okay. So what will likely happen, or what I'm expecting to happen on Monday at the open, well, actually at 4 o'clock a.m. Pacific time, sorry, 1 o'clock a.m. Pacific time, or 4 o'clock a.m. Eastern time. We'll see how the lines set in the pre-market. So if the Nasdaq and the S&P gravitates toward a green open, then most of the pre-market is going to open up pretty flat, but some might gap, right? And if Tesla gaps, say above 196.36, where it's still connecting the wick of the on Friday's candle, then it'll open up as a doji and then try to push through that 8 and make it up to above 203 to 205, which is half the ET. And then Tuesday it'll probably tag that 210 to 11, completing the ET. Okay, so that's what I'm expecting. That's my current position at the moment. There's a lot of other daily wolf waves. I think there is one in, I mean, if you're a Snap trader, there's one in Snap, right? And there's a lot of gaps all the way up to 14. Was there another? Let's go through this together. Apple. So when I use the wolf waves, I just kind of go through the daily first, and as I go through the daily, I kind of just pay attention to where each candle is relative to the 6-day moving average. Okay, so here Monster just got hit, and you might be thinking, okay, you know, this is going to go lower to fill that 123, but at the same time there's a mean reversion back to retest the 6-day moving average. Is that a trade that I want to take? And for Monster, it's pretty tough because the spread is very wide. That's something that I would try to avoid. Netflix, this one actually looks like it's going to break out and fill that 330 gap, so it is a little bit extended. Let's put the Bollinger Band here to see how it looks. Right, so it's not looking like, well, it could easily break out and then hit that 330 if it opens up. Usually the Netflix trades quite well when the bands contract. It does look like it has this type of candlestick pattern where it's sharply up higher on the green day and then it pulls back to try to retest the 6. So maybe if it does that on Monday, it could do that, or it could move up even higher. So what I would expect is if it opens up at 289 flat, that's flush, then I think it just moves up to 300 on into Monday and Tuesday. And it should be noted that Netflix did trigger TGIF on Friday. So Nvidia has took off on that kicker. So the kicker is the red candle here, and it gaps up, and it's looking like it's going to tag that 200-day moving average at 182. Pan W had a wolf wave that moved off of its kicker, and it's looking like it's going to try to move up to that 200-day moving average at 175. Rivian also has a daily wolf wave looking like it's going to try to tag that 37.38 200-day moving average. Roku had a massive kicker, and it's also looking like it's going to move. It's already moved up to the 50. Now it's trying to look like it's going to move up to the 100-day moving average, but keep in mind it's quite extended. There is an A6 here, which means that there's a potential for it to even move up higher on the breakout that it had from CPI. So a lot of actually, when you look at the growth stocks, that's the one that's got beaten up the most. Most of those stocks are down 80%. They look like they're going to keep on running into January, and that's because a lot of the growth stocks tend to rally into the January effect due to the tax selling losses that were incurred in 2022. So those losses will be deferred into 2023. And I think there's a lot of interest in this, the growth stocks to pump all the way up into January. So Shopify, Roku, Snap, all these growth names, they're going to probably bounce in a significant way, whereas the FANG stocks are going to probably be lagging because all the money is probably flowing into those beaten up stocks like Shop. So another company that's gotten beaten up that's a growth stock would be probably, well, Alibaba. It's not a US growth stock company. Net looks like it's one where it's being kicked on that CPI day. So there's a lot of kickers, and the kicking component requires the daily candle to be red, and then the next day it should open up if higher than the open on that red daily candle, which it did here. And the amount of time that it takes for it to play out would be, I mean, my best guess would be January 2023 or Christmas. And the short-term target for this would be 200-day moving average at 72.59 for net. Facebook, it already moved up quite a bit from its lows, and actually on Wednesday with the layoff announcement, it actually gapped up. Now it left a lot of gaps here, which is a bit concerning. It does look like it's going to try to tag that 50-day moving average, but at the same time, it's already extended. So that's the thing with these trading instruments, is that when you're at the lows and you see the the clear targets of the 21 and the 50, and you're now kind of in the same position as I am, not in Meta, then what you can't do is probably chase this. You want to see if it kind of pulls back or shows some sort of consolidation on a lower time frame in order for this thing to break through that 21. Ideally, you want to get into the positions before it makes the move to the 21, which would have been down here on that gap, but that's something that I was not able to do since there was so much negative news surrounding Metaverse and its new business model. Snow has a daily wolf wave, so this is also a growth stock in the cloud technology industry. It kicked off that doji, and it looks like it's going to try to bust through that 50, all the way tag that 200-day moving average, and possibly even go and reach the target of $200. That's the psychological target, 200. So this one is a pretty good setup here, but at the same time, it is extended. So depending on how the futures, like if the futures remains red, like that's an inside day candle, it can still move up by the end of the day to tag the top of that Bollinger Band at 11,931, and then on Tuesday even push through 12,000 because there's that gap. And I think this gap, when you look at the formation of the candlestick on the Nasdaq, that's a bull flag that's forming, and it's probably going to be probably flag in such a way that this green dot will move right to 11,633 and then bust out through that 100-day moving average and make it run to 200 into the end of November, and then even push it up to 13,219 by the end of December. Okay, so right now I think the market is a little extended, but it should. We'll see how the futures recovers overnight. I'm still thinking that this is a this is going to end up trading in the green by 1 o'clock a.m. Pacific time. And if it does that, then all the extended hour prices should start to show green. My current position right now is in Tesla, so I'm expecting, what we could expect here, because it is short week, we could see a doji form here and then a breakout on Tuesday. Hopefully we get something even better. We just get the breakout that pushes up to 205 and then some follow through coming in on Tuesday, pushing up to 210. Now, if it does open up flat, that's good, right? And then if it runs up quickly and within the first 30 minutes up to 205, 204, I'll be closing those positions, because what's going to happen most of the time, especially if the trend is up above 1, you're going to get that pullback, and that green thick candlestick is going to look like a doji at the end of the day, making that candlestick pattern combo, that BLT setup. So BLT setup is, I don't know if I can see one here, but it's basically when you get like something like this. You get a nice thick green hard candle, and then you can see that it gaps up. So if it gaps up, then you only got like a couple bucks worth of premium to collect after it makes an intraday high, but then it'll pull back and retest the 6. So that could happen on Monday. So if we get an open higher, then I'm going to be closing my positions and then waiting to buy back at the end of the day, looking for the next green candle here. And that's a BLT: bacon, lettuce, tomato. So you can actually see this bull flag where Tesla moved up quite a bit from these dojis. That's about like a 16% move. And then from a 16% move, it flagged back to the, it flagged such that it pulled back about 7.59% and then broke out in a meaningful way to tag that 200-day moving average. And that is kind of like what I'm expecting here on Tesla. We got that bacon here, and I'm not sure exactly, if we're going to get a double B, which is basically a duplicate of this green candle forming on Monday. But if it gaps, right, up to 205, which is on news, that'll be a 4% move, 4.5, right? 4.5% move, and that's the daily, that's the average move that Tesla makes going into Friday into Monday to Tuesday. So that, if it makes a 4.5% move with no news, then you better close that position, because why the hell is it up 4.5% with no news? If there's news, right, then I'm gonna hold on a little longer, probably till the end of Tuesday, till Tuesday 10:30, because that news is gonna bring in additional momentum to push it up to 211. Okay, so whenever that news comes out, it could come out exactly 1 minute before the market opens. It could come out anytime late night. I'm not really sure. But I think there's probably no news. But if it gaps up with no news, just keep in mind you want to close a position when it's up 4.5% and then look to buy back at the end of the day when it pulls back. Okay, so this gap is, if I had to take a guess here, it's already so close to filling that gap. I think it opens up a little lower depending on the futures. If it opens up flat, it's going to fill that gap and run to 205. That's where I'll close and then look to buy back at the end of the day once it pulls back, and then look for another push up to the 211 mark, which is the ET. Okay, so thank you very much for your time, and have a great day.